So, guys, today super exciting. We're with Mr. Mpho of Indigo Beans Property Group, and we are talking about financing your house, especially in light with the recent interest rate increases. And we just need to understand that, right? Because a big part of building wealth is going to be buying a house, at least your own house that you stay in. That's what they say. So it is very important in my books to have this discussion. So, Mr. Mpho, how are you doing, sir?
Good morning, everybody. I am doing very well. I hope you are.
Before we start, sir, you can just introduce yourself and we can get it going.
Yeah, good morning, everybody. My name is Mpho. I am the entrepreneur as well, member of the community. I run a company called Indigo Beans Property Group. I'm an estate agent. I am an auctioneer, and I'm an appraiser. So I am very passionate about real estate. That's what I do. I do as well buy and flip properties. I'm very experienced at that part as well. So yeah, this is me.
Awesome. So cool stuff, man. So where do we start, man? This whole situation. I don't know what Lawrence is saying, that the repo rates wants us to vat and sit. Lawrence, just stay
Yeah,
at
no,
home. But anyway, let's.
repo rate is killing us. I think perhaps we should start with what has happened in the past year. Since May, I actually did some notes here. In May 2022,
But maybe
interest
before
rate.
but I would like you, sir, maybe to also just define these terms, right? Because sometimes
Yeah, yeah.
other people might not really understand and all these things. Yeah. So yeah.
Yeah. So prime interest rate is also known as the prime lending rate. It is a basic or default interest rate that you could be charged when borrowing for big purchases like a home or a car. So it is linked to the repo rate. The repo rate is what the interest rate that the commercial banks borrow from the Reserve Bank. So basically, it's what we get to be charged when we borrow when you're buying a house, as well as when you go and borrow for interest rate. When you do your credit card and all those things. So obviously, when they are running a business, when you go take a loan for a car, whoever the lender is will need to charge you interest. So basically, that's what we are going to be talking about today.
Awesome. No, cool stuff, man. So you were saying, what has been the history with regards to this?
Yeah, what's been, it's such an interesting topic because just in the times of COVID, we saw interest rate going down. And obviously, it was because there was a lack of interest with people buying. During the COVID times, there were no sales. People were not borrowing money. People were not buying properties. People were not buying houses. We were all focused on this thing called COVID. And some of us were thinking, okay, is this the end?
We were washing our clothes. That's what we were doing.
Yeah, we were actually just doing that. And we were all focused on, okay, when I die, I should not have, if COVID catches me, I should not be in debts. At least I should not be borrowing any money. And as well as the challenge was that people were worrying about whether they have a job by the time this thing goes. And therefore, we ended up not having to take any debts, and interest rate went down in order to encourage people to take on debts. And when we start taking on debts, then boom, Mr. Khanyago comes back and he's like, listen, you're taking too much debt, and then he starts throwing the interest rate going up. In essence, in May 2022, interest rate, prime lending rate was 8.25%. And in November, it went to 9.75%, same year. And in January, we were at 10.75%. And now we're sitting at 11.25%. So I'm going to give you an example, for example. So if in May 2022, you were taking a bond, you were buying a house for R1 million, your repayment at the time in 2022 May was 8,520 520.66. Obviously, I'm not including the other costs of insurance and levies and all those things. I'm just talking about what you borrowed from the bank. Now, comes November, someone goes and borrows money again for the same amount, for R1,000,000. He borrows for R1,000,000 in November 2022. Suddenly, his repayment goes from 8,520 to 9,983 because in November, interest rate was at 10.5%. And then in March, we go and borrow again R1,000,000, or you have a bond of R1,000,000. Your repayment has now moved from 8,520 in May, and in March, just under a year, you are now paying 10,492.56 rands per month. So that's that's the effect. So from May till April 2023, you are now paying 1,971.90 cents extra on your bond. That is what the problem is.
Wow, and this is just in a space of a year, under a year. So
just under a year, Absolutely. You know? And now we're sitting here, we're thinking Mr. Khayago has become our worst enemy as in real estate. I mean, everybody's like, okay, what is going on now? At the time when the interest rate were going up, we were putting up banners and saying, hey, go buy a house, go buy a house. And now we're sitting here and like, wait, what is this guy doing? It's because there has been too much demand for credit, and now they are trying to discourage us from taking credit, and they are now putting up the interest rates.
Wow. So what does it mean? Like, you know, when you had already bought a property in May 2022, like that property for 1 million, is there a way you can, you know, maybe lock this interest rate or what? Because now you're saying essentially, if you paid 8,500 back to the bank in May 2022, today you're paying 10,492. And if you had not made the plan for you to increase your income during that time, then you know it's shy, and many other things are increasing. That's the thing. It's not just what's increasing.
Yeah, and it makes it worse.
In your life.
Yeah, it makes it worse. Now you didn't get an increase at your workplace, and now suddenly Russian war happens, and I mean for the first time, I heard of a truck full of cooking oil being hijacked. What an amazing situation that happened. For the first time, you go buy a 5-liter cooking oil from 100, I think 60 rands. Now it's suddenly sitting at 150 rands. What a change. And not just that, there's many other things that happened. And that's basically the other thing I want to also talk about, Henry, is, you know, in that situation, so say in May 2022, you were earning 30,000 rands. And I'm trying to actually bring out the scenario of what happened, the depletion of our buying power. In May 2022, you were earning 30,000 rands. You apply for a bond at 8.25%. You could afford a house for 1,056,256 rands. Now in March, you are earning the same 30,000 rands at 11.25%. Now you can only afford a house of 750 rands. Now there's a depletion of your buying power of 198,000 rands, 506. It becomes, you see, that's what happens whenever this situation of interest rate going up, going down. Now, when it goes down, now you are able to buy more because now you can afford. Interest rate affords you to be able to go and buy a bigger house because of the low interest. But when that changes, when that flips around, now your money, your ability to buy that house for 1,000,000 rands with that salary that you have changes. You know, that's basically what happened. Now you spoke about locking up your interest rate. Of course you can. I mean, you can do that. I actually was trying to, I mean, I must also put a disclaimer that I'm not an expert. I'm not a financial expert, but I do know that it is possible for you to lock your financial, your interest rate from it going up and going down. The challenge that with it is, if, say, for example, you locked it at a very late time, at the time when the interest rate has gone up, when everybody starts moving back and it goes back to the interest rate, you are stuck in there. So I believe it's always better to actually lock it at the time when it is still low, so that when it increases, because it's part of life, it's a cycle of life. We all move back to we lock it, we go up and down and up and down, this scale that goes up and down. That's basically what happened in life. Yeah.
Awesome. One thing that you actually say, before I give some shout outs here, is just that you just don't buy a house which is at the limit of your affordability. That's what you're saying.
No, yes. You don't. I mean, one of the biggest. I'm an estate agent. I'm a salesman. I would like to make money. Whenever if you can buy a house at a high price and I walk away with a sale, I would like to do that. But what's the point of me seeing you struggle later because you bought at the limit? I know what is going to happen. And as a businessman, I also have to come to, and as an entrepreneur, I can't just be selfish and say, okay, buy, you qualify for this. And these are some of the things that I'm going to speak about today. When a person wants to buy a property, it's some of these things that salespeople like me don't get to tell. I think it's important that we must be able to say to our clients, listen, I know you qualify for R1 million, but interest rate goes up and down. When that happens, rather let's look at going a little bit down, so that when these eventualities happen, you do not find yourself in a situation. And I do feel that people should not make that mistake.
So Mr. Vronga Holding is saying, I warned people on radio when COVID started that don't buy based on the loan interest rate, because it will go back to normal. Yes, definitely. So, all right, cool stuff. So, you want to join our WhatsApp group, Success Inspiration? Only admins can post, so you don't have to worry about a lot of people posting. So, guys, much love to you, Mr. Mpho Mketwa. Thank you very much. Have a great day.